Hi, Russ Siegel again with Sequoyah Fund. Today I'm going to be talking with you about the 10 things lenders look for when you ask for a commercial loan. The first thing is actually a combination of factors. It's the 5 C's of credit. Please look at our other video where we discuss these in detail, but I'll go over them briefly. The first is character. What sort of person are you? Are you the kind of person who's going to pay back your loan? Number 2, capacity. Does your business have enough sales and profits to be able to pay back the note? Number 3 is capital. How much money do you have on hand? Do you have sufficient capital to pay your debts? Number 4, conditions. Is the market right? Is the economy right for you to be starting this business or growing your business? And number 5, collateral. Do you have something that you're willing to put at risk in case you can't make the payments? Something we could sell to apply to your note. That's the first thing. The second thing we look for is how much money you want. Keep in mind that how much you want and how much you need may be miles apart. We're specifically looking for how much money your business is going to require. Don't plan to go to any lender and ask for what you need now plus a little bit more to put in the bank for a rainy day. Lenders don't like to see that you have a large contingency fund. We want to see that you have good planning. So develop a good cash flow projection that shows us just how much you'll need. Number 3, what are you going to do with the money? Is this going to be for inventory, for equipment, for supplies, for adding people, for buying a building? Be very specific in what you want to do with the money. Number 4, why will this loan be a good thing for your business? Business loans have to make your business stronger. No lender wants to dig you out of debt using more debt. So, be very specific about how you're going to improve productivity, enter a new market, or other good things that you're going to do with this money. Number 5, why do you want our money to do this? You need to be able to prove that you cannot fund this business through the capital that you have in the company, through other investors' money, or through your own equity. Number 6, when will you pay back the loan? Keep in mind that the longer you stretch out the payments, the riskier the loan becomes. We want to see that you're financing short-term needs with short-term money, longer-term needs with long-term money. Inventory is a prime example of a short-term need. If you turn your inventory over 3 or 4 times a year, don't expect to finance your inventory purchases over 5 years. Number 7, how will the money be paid back? Again, this comes back to your cash flow projections. We want to see that you're able to pay back the loan from sales. We don't want to see that you're having to dip into your credit cards or to your child's piggy bank to pay back the note. Number 8, what happens if things don't go as planned? You know, we all have grand visions for our business, but sometimes things don't work out. Lenders want to see that you have thought through the contingencies, thought through all of the what ifs, and come up with a plan for how you're going to handle things if your picture is not as rosy as you planned. Now, number 9 is the flip side of that. What happens if things begin to grow too fast? You can sell yourself out of business. You can become very profitable and bankrupt because you run out of cash. We want to see that you have a good plan for growing responsibly and managing cash. And number 10, who are your customers? This is really what it all comes down to, because your customers are the ones who are going to give you money to be able to pay your obligations. We want to see a very good, clear definition, a good, clear picture of your customers. Who are they? Where are they? How many of them are there? How are you going to reach them? If you can define your customers, you can find them, you can give them what they want, you can service them in a way that's going to make them happy. Getting customers is only part of your job. Keeping the ones that you have is the other part. We want to see how you're going to be able to do that. So there you have it. The 10 things we look for There should be no surprises now when you go to a banker or to another lender, or you come to the Sequoyah Fund for a loan. You know what we're looking for. Join us again for another of our video series. Again, I'm Russ Siegel with Sequoyah Fund. Thanks for joining me.